All right, this is the first 25 ETFs, the first half of my list. And as I said in the initial video, this is in alphabetical order, meaning that it's not necessarily much of a narrative because it's kind of random. And I'll spend some more time on some than others. Okay, off we go. DBC. This obviously was shaken and baken by the oil announcement this weekend. But oddly, the path is still lower. We have broken quite plainly below this ascending channel. And now we've got this pattern going on where we're just sort of ambling lower and lower with a series. And this is very important of, even with the oil bump, of lower highs. Just follow my arrow there, down we go. Lower highs every single time, even with that explosive move on oil, did not even manage to beat the prior lower high, and of course lower lows. So just downtrend continues. The diamond is in this channel here. I've also supplemented this with this resistance line here, 336.25. So we've been channel bound for gosh, almost a couple of years now. And then most recently, as I said, we've got this break beneath this cute little top pattern here. We fell, retraced, tested, fell even harder, pushed all the way up, and seemed to be backing away. Plus, we're proximal to that descending trend line. EEM, pretty boring. This used to be a very, very interesting chart. Emerging markets have just, it's like death. It's just not doing anything. I mean, I guess there are times when this just meanders. I mean, here we had years and years. We're just sort of ambled around the lower 30s, more or less. So this was very exciting, and this was very exciting. And now we're doing this stuff where it's just been, you know, more or less $39 for months. So I haven't touched that for eons. This I have very much touched. This is the biggest position. This is EFA. And the crucial line here, I would say, is this one, thereabouts, 72.44. That is roughly the base to this topping pattern. It was also the peak of this massive retracement that commenced, of course, on October 13 and terminated, of course, on Groundhog Day. And we have come full circle, if you'll forgive the geometric inaccuracy, by getting right back to Groundhog Day, which is quite fitting holiday for this. Anyway, enormous short position on that by way of September puts. EMB, the emerging market bonds, just as dull as the emerging markets. Here's Canada. Yeah, pretty ho-hum. You know, it's kind of topped out. It's kind of peaked. We've got the same sort of face-off that I won't shut up about with the bullish, with the bearish mass here, the bearish pattern, and the bullish pattern down here, and kind of the line of scrimmage. I never thought I'd be using that term so often, but that's definitely the term of art right now for this market. Japan, mildly interesting. This is an enormous multi-decade trend line, and we got our big top up here, hard fall, and also a face-off, but look how much lower this is compared to this. In other words, in your mind's eye, take this whole chunk and push it up to this line. That's what a lot of other markets in the all-world index look like. Japan is so weak that even its bullish base is well below the aforementioned line of scrimmage. Brazil, EWZ, whole lot of nothing, which is kind of odd considering how crazy commodities has been lately. Here's the Eurozone, very thinly traded, but I like to keep it around because it's got so many cool tops and bottoms. It's just, I don't have a graph like this. There's so many neat reversals. What's weird about this one is that it has escaped its trap. It had been in this lovely little pattern here, and the most recent, the billionaire banker bailout just blew this right past its pattern. So this has done the same thing the FTSE did over in Britain. It just reached escape velocity and got the hell out of its topping pattern. Here's China, FXI, Dullsville Incorporated. Here are the miners. Now, the premium members, I did a special post about this earlier today, and we did indeed exceed the gap. So gold, terrifically strong. Here's the junior miners. In this instance, there's no gap. The only, and it's very minor, but the only thing to watch for now is this line here, which is the prior peak way back on June 2022. But this is a big old cup with handle pattern. It would be absolutely plausible for this to push above here and maybe even escape this line here. I mean, if gold goes berserk, then this could be very, very powerful run. Speaking of gold, there he is. And this one is a very interesting critter. It should be really, 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 really tired by now, because this was our lifetime peak back in August 2020, which is extraordinary considering how much has changed since then. But that was the lifetime peak. This was the attempt to beat it, which failed rather dramatically, I may say. So back on March 8, 2022, that was kind of the last gasp. We have a island reversal pattern here, and it just got shellacked. This thing fell and fell and fell and fell. And I probably dumped a big chunk of it right around here, knowing me. But this was a tremendous drop. And it has recovered almost every penny of that. We are getting within spitting distance. We've recovered the entirety of the island reversal drop, with the exception of this one day, which was a huge range that day. But yeah, we're just below that line right now. So it'll be very interesting to see if the US dollar stinks so badly that it even beats that. HYG, boring beyond description. IEFA, so similar to EFA, it's not really worth going into, but you get the idea. We've got our old face-off going once again. And these are terrible options, so I don't monkey around with that. I just do EFA, whose options aren't anything to write home about anyway. Here's ITB, which is, I think that's home building related. It's kind of surprising how strong that is since it's home building related, but again, dull. Here's the small caps, IWM, which were particularly weak today. Of course, these got clobbered with the bank wipeout, and the bank wipeout, it's still, not exactly recovering, so we're still rather weak on this. A little hard to read. It's been kind of ambling with its own Fibonacci range right here, but just kind of a snoozer. IYR remains a terrific long-term favorite. This has been very fib friendly. We're hanging out this Fibonacci right now, and strong support is down here. IYT, the transports, plain as day. We have broken the trend line, and now we're sinking away from that. JNK, again, high yield instruments, boring, 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 boring. KBE, the banks, total wipeout. Even at this great distance, you can see what a calamitous crash that has been. LABU, not worth mentioning. LQD, boring. Mid caps, relatively boring. I'll just zoom in for a sec and point out that we've stayed below this resistance line. It's kind of a hot mess right now. Sorry to waste your time. Okay, moving on. Actually, this will be our last one. Kind of end with a whimper, not a bang here. This is municipal bonds, MUB, and this is the same sort of languishing that all the other high yield instruments are doing. I will just close by saying in very general terms, because I've blown past all those high yield instruments, but I will say what applies to all of them is the exact same face-off that I keep talking about, with this bearish top here and this bullish base down here. And the line of skirmish, round about there. And so this is the tremendous tension, at the same time tension and equilibrium, because we're at the tremendous decision point here, which I suppose may be resolved by the earnings season. And if not the earnings season, then some exogenous geopolitical event that none of us can anticipate one way or the other. All right. Well, that is, I like these things to be about 10 minutes, so that's just about going to nail it. And we are halfway through. And for all paying members, video number 2 is coming up.